All right. So I'm gonna go ahead and get this thing started. Today is November 24th, Tuesday, November 24th, 2020. And we're going to jump into our pairs and see or our assets and see what the market has been presenting this week. So let me go ahead and I think I'm already sharing my screen. All right. And we're recording. Okay, great. So okay. So basically on Sunday, we did our weekly market forecast and we went through the GBP AUD, the GBP CAD, Aussie CAD, and the Aussie Yen. All right, these are the pairs that we were focused on. And we were also talking about the MACD cross, which was a very profitable over 90%. It was about 93% win rate. Okay, and this was intraday or a swing trading strategy. So we're going to again get an update on that, see how this strategy has been performing since Sunday, and we will also basically predict what we think is going to happen next, just like we always do, right? This is just my opinion, but let's go ahead and we're going to dive into it. All right. So we're going to go ahead and start off with GBP CAD, and let's go look at Sunday. So Sunday, the market open here. All right. And let's go ahead and map out the cross that we got on Sunday. Actually, that's Friday. All right. That's kind of how I do it. So we got a couple different moves. We got a 125 pip move that we got. And basically I'm mirroring or looking at down here at the MACD with cross, and I'm going up to the candle and I'm looking at that move. All right. So that was one move. All right. And then we had a buy signal. Just in case you're wondering where the buy signal is, the buy signal occurred about right here. Okay. So we ended up getting another 122 pip move. All right. I'm looking from cross to cross, from low to high. All right. That was another 122 pip move. All right. And again, y'all, this is just last week. This is last week. Okay. All right. From cross to cross, we had another 81 pip move. All right. So that's when I was just basically trying out the strategy before basically introducing it to you all. And, you know, it gave us those moves. But let's go to this week. Okay. So this is Sunday. All right. And this is basically where we picked up last call. We were predicting some bullish activity. All right. And as you can see from cross, all right, this is where we were. All right, to this high, went about 96 pips. Okay. And remember, we were saying from cross to cross, average is about it's about 90, it's really about 100 pips on average from cross to cross. And the average hold time was about 20, really about 2 days. All right, just a little recap, just in case you're tuning in for the first time with this strategy. And then we have another cross, all right, which is currently the move that I'm in right now, which has also been a profitable move. All right, got the signal there, and so far we're up about, and I've been up in and out of this trade, but so far it's been about 50 pips, and we're looking to go really another 50 pips, giving you another 100 pip move. All right. So again, this strategy has been very, very effective. Okay. Um, and at the same time, you don't want to just go solely off of the cross, right? We still have obviously support and resistance, and there's going to be pullbacks as well. Okay, so you're using this strategy, but you're still combining it with the same support and resistance. All right, and market structure, uh, ideas or training that you already have. All right, just to go back out. So again, this has been very profitable. We caught 2 swings from here to here, and then from here to here. All right, so it's been about 200 pips or so far, which is crazy, being as though it's a holiday week. All right, and this strategy really does make sense because you're really, you're using averages. Okay, you're using averages. Again, we're using the MACD, so we use the last 20 periods. When that cross, well, the sum between the last 20 periods and 50 periods, when that crosses our signal line, which is the last 12 periods, that's what this is. Okay, your MACD. All right, we're just using numbers to help us identify trend change, right? And then from there, uh, I've been basically just, it's kind of, I guess it would be called intraday trading, which I kind of look at more like scalping, right? It's kind of like day trade scalping. So again, we have our swing moves, but we're getting in and out of the market, you know, 20, 30, 50 pips, at a time. Obviously going with or looking for the pullbacks. All right. Uh, Basically, again, market flow. Okay, market flow. That's basically what I'm saying. Using the flow of the market to actually generate yourself a profit or income. All right. So one thing to note on the 4 hour, we just got another cross. Okay. So, with this strategy, I mean, again, it's really helping when price reaches those support or resistance areas, and you're trying to figure out if it's going which direction it may go to. All right. Okay. So again, just using the support and resistance rules that we already know. That's kind of what we're going to tie into tonight. All right. So I've been kind of taking these rectangles, and what I want you to look at is these areas of consolidation, right? You got consolidation right there, or it's kind of like ranging, right? You got these areas, okay? And basically what that's doing is showing you um again the areas of support and resistance. Okay, so I want y'all to maybe get in a habit of drawing these little rectangles or boxes so that you can see these areas, right? Because we know that prices always is what, going up or down or whatever, but a lot of times it's doing this little consolidating. I'm sorry, my mind. It's hard for me to do stuff and think and talk at the same time, and I'm just going back and forth doing the same thing over and over again. Anyway, so I want you all to look at, especially the last couple areas, right? These are all areas where price kind of you know, again, it was consolidating, right? And notice that, you know, even though we may be in an uptrend or a downtrend or whatever, when price is going up or down, it still likes to revisit. All right, it still likes to revisit floors and ceilings of the last consolidation. So that's what I want you to kind of look at. So as you can see, we got an area, prices going up. It's an uptrend, right? It's setting higher highs, but it's not setting lower lows. Okay, that's basically what I'm talking about. Go back to rectangle. Okay, this kind of showing you these areas, right? These little areas. All right, so pretty much I've been using these areas to map out entries and exits. Okay, entries and exits. And this is where the day trading or kind of scalping the swings, where you can kind of catch, you know, the bullish move and the bearish move instead of just holding on the trade. You know, it's kind of cool sometimes to just get in and out, in and out, in and out to protect yourself from when these unpredictable moves happen, so to speak, right? Which happens all the time. So right now what we're looking at is, I'm taking a look at the MACD. All right, I'm showing you these areas of consolidation, which is like, again, floors and ceilings. All right, and we're using those. Notice how I'm using this area, which is the floor of this last consolidation, as my take profit in this particular trade. All right, and then as far as my stop loss, I'm really using, I know it's kind of in the middle, but I'm kind of looking at this as an area of its own consolidation, right? It'd really be good to have the stop kind of right there above R1. And in all actuality in this, I'm kind of hoping for a bigger move, but you always want to have your proper risk to reward. So, you know, we kind of putting it tight right there. All right, hope for the best. But anyway, so that's pretty much what we're looking for here. So if price breaks through this level, all right, then we're kind of looking for our next level, all right, which is you can use this. You could kind of put it like this, all right, where you kind of have this whole little this whole consolidation kind of in the rectangle. All right, so you could look at that as a take profit. Price comes down some more. We can kind of look at this as a take profit. And obviously, if price comes down some more, you know, we could look at this area as a take profit. If price comes down some more, we could look at this area for take profit. Okay, so we have a cross on the 4 hour. The 2 hour is been crossed. All right, so again, we're looking for a trend continuation in the GBP CAD right now. All right, I can definitely see price, you know, hitting this this level. And let me put it back. Sorry, I almost jacked myself up. Put it right back there. All right. So when price comes down to this level, it's very possible, Okay, that yes, this could be, we're looking at possible trend change with this cross on the MACD. All right, but as price continues to drop, all right, remember, price still kind of likes to come up and at least touch the base, right, of the last consolidation level. So I can see it coming down to this level, take profit, coming back up to either here or somewhere in this consolidation area, and then continuing on to the downside. So again, you could decide to just hold and just possibly take that whole move, or get in and out, in and out, in and out, in and out, in and out. All right. I mean, doing this, I've been able to get 40, 50 pips in a matter of a couple hours, right? A couple hours, especially if you're looking at what times a day, these big candles are happening. You got a 3 a.m. candle, you got a 7 a.m. candle, you got another 3 a.m. candle, right? 3 a.m. candle, 7. So something about 3 a.m. and 7 a.m., that 4-hour period, okay, where we're getting the biggest moves, right? So basically what I'm saying is, yes, this strategy is working phenomenal, right? But however, you still have to take into account that there's going to be pullbacks, all right, where price isn't gonna go all the way straight down, 200 pips or whatever it is. So you know, I really, it's really important to make sure that you go back. Just in case you missed the last video, we went back a whole year and we back tested, okay, multiple levels of this MACD cross, okay, and it gave off some insane data. So it's very important to make sure that you treat your account like a business, right? Like a business. And you record data, you record information. Why are you doing what you're doing? All right. Are you winging it? Right? Are you winging it? Or do you really have a strategy? Okay. And this is just one strategy out of many. There's many strategies out there. Okay, let me just show you this again. This is data. How this data, we can use this data. I went on the chart. I mapped out all those swings. I recorded the data with my calculator, and I recorded the date, the time. Was it a win or a loss? I only said it was a win if it went at least 30 pips, right? At least 30 pips. And eventually, I started to record how many bars, which is the amount of time that it took from swing to swing. All right. So within that, this strategy won over 90% of the time. And it was said that the average time, which is crazy that I wouldn't even realize this, that this pair moves, all right, is or when the crosses happen, I should say, all right, is so the best time to get a position is really around 12:40, just after noon Eastern Standard Time. That was really interesting. And all week, we've been getting the moves really have been happening afternoon, right? So as far as the pips is concerned, it was an average of 128 pips of profit from swing to swing. All right, which is crazy. And the average hold time from swing to swing was 30, uh, 30, 30 bars. So that's basically about 3 days, because you're doing 2 hours each bar, right? So that's about 3 days and some change. Okay, 3 days and some change. So this data suggested that, maybe hold on to your trades a lot longer. All right, hold on to your trades instead of, getting faked out or want to go this way or that way or this way, or that way. All right. And then obviously those are the averages, but you can also look at the minimum, right? The minimums were really like losses and stuff like that. So if price moves against you, basically this is what this data is saying, because the biggest loss was about 44 pips in this strategy. All right. But if price moves against you within the first 3 bars, then you can take your loss really quick. That's basically what this is saying. All right. And the maximum amount of time that is suggesting that you stay into a trade is about, it says 83 bars. So that's about 8 days, right? 8, 9 days. So about a week, week and a half. Again, that's if you're trying to trade less and do more. All right, that's what this data is telling us. So whatever strategy that you implement, you want to get a big sample size to validate that strategy, okay? To figure out is it worth doing? Because if you don't have a strategy, then you winging it. Obviously, you're going to be getting winged results, and this is not the business to be winging anything in, right? Your account is going to be gone. Is basically what's going to happen. So, especially with this, I believe, again, it's just my opinion, that if we stick to numbers, if we stick to averages, numbers don't lie. And this is something that I like to, an aspect in business that I like to go by in whatever business that I'm doing, basically, is what I'm saying. All right. So yes, back test, multiple pairs. Let's see the difference in data. Let me go to the AUD CAD. All right. So now we're looking at AUD CAD just to see how the data is a little different, even though it's the same strategy, right? I think I'm looking at this. Okay. So same thing, 1220 on this one. All right. Maybe it's something about the AUD. I don't know, but it's still saying 1220 is the most frequent time that a cross is going to happen. This strategy was still 90+% on AUD CAD. All right. The average amount of pips though was about 97. So about 30 pips less than the AUD JPY. All right, from swing to swing. All right. The biggest win was 550 pips, and the biggest loss, which happened one time, was a 134 pip loss. Right. So again, what this strategy is telling you is don't over leverage your account, because you can see yourself down quickly. All right, from time to time. So factor in, hey, if I end up taking a 134 pip loss, how would that impact my account? If you don't over leverage it, you can survive easily a 134 pip loss. Okay, but I strongly suggest that, again, if you're kind of doing the intraday strategy where you're getting in and out of these swings, then you could really avoid that 134 pip loss, right? So yeah, that's just interesting data. And then we'll go to the bars. Average hold time with this one is about 3 days. Same thing, max is about 8 days. And if price, you would know within about 3 bars, so it's about 6 hours, if it's a loss. Again, quick losses, quick decisions. All right, use the data, whatever data it is, and I'm gonna go through other strategies, and I want to back test these strategies and figure out which ones are working and which ones are not working, right? And then I'll pass that data on to you, obviously, because that's what we're here for. We family, right? And whatever data that you come up with, man, don't just wait for me to do the data. If I'm pulling data and I'm figuring out what strategies have, remember, we're looking for in Forex, you don't win all the time, right? But if you can win with proper risk to reward, three times, at least 3 to 1 your risk, then you can make a lot of money. All right. This strategy, just look at the total number. All right. Let's look at the sum. All right. Actually, I didn't even finish this one. So through up until July, this strategy gave off 6,000 pips. So I'm pretty sure it's close to the same number that the AUD JPY strategy was, which I think, if I'm not mistaken, it was about 12,000 pips, right? Yeah, so 12,036 pips from swing to swing, positive. Like, imagine what 12,000 pips, okay, could do to your bank account if you don't know how to calculate it. If you're doing $1 per pip and you 12,000 pips up, then that's a 12,000 pip profit, okay? If you're doing two pairs and you got 12,000 pips on each, then at $1 a pip, you're talking about growing account from $100, whatever it is, right, to an additional $24,000. Okay, that's what that means in math terms. All right, so just imagine that if you had $2 a pip, all right, that means that $48,000 in pips. Okay, so this strategy, especially for beginners, I would make sure that this is something that you implement right away, because having a profitable strategy that's tested and proven is going to be the determining factor on whether or not you are how quickly you become profitable and how profitable that you become. All right, so I would definitely implement this strategy if I was you. All right, so it's, again, you're combining your basic level or your basic knowledge of support and resistance, going from zone to zone or consolidation level to consolidation level, for your entries and exits. All right. How do you make sure that you're getting, you're on top of these crosses? Remember, you're going to set your alerts. All right. I set an alert for any time there's a cross on the 2 hour. It may be a good idea to also set an alert for the 4 hour and probably even the daily as well. Why not? Why not? Because if those, whenever you're having, basically these crosses are using math to basically kind of give you pivot points and identify possible trend changes, okay? Trend changes, or just change in direction in general, all right? And all we're trying to do is basically just ride that wave in, right? So anyway, I'm doing a lot of talking, I know, sorry. So as far as direction, we're looking at the GBP CAD to have some more bearish movement in it. All right, bearish movement in it. Go back to the 2 hour GBP AUD. We're looking for this also. Okay, we're looking for this to also remain bearish. AUD CAD. Now this one is at a cross right now on the 4 hour. And on the 2 hour, it appears that we have some type of double top kind of resistance there. I took a look at the CXY, which is the index. We're looking at how the currency is performing by itself, which is basically it's been on an uptrend. Sorry, how to move this out the way. But it's been on an uptrend. And then we also going to look at the AXY, which is the Australian dollar index. And this is also on the uptrend. And guess what, y'all? You could put the MACD on the index to see how the currency is performing on its own. Now, when both currency pairs are moving in an up fashion, okay, up, you see it's been going up, 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 AXY, up, 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 CXY. Usually, all right, remember we're playing the numbers, all right? Usually, this will give you a bearish, okay, a bearish reaction on the chart when both pairs on the index are moving in the same direction, which is up. Normally, you get a bearish movement on the chart. If they're both pointing down, you get a bullish reaction on the chart. All right. So for an example, you see this, there was some bearish movement. All right. There was some bearish movement. But when we go back to the chart, there was bullish movement. All right. Because both pairs or both, currencies, index were pointed in the same direction. All right. When they're in the opposite direction, AUD CAD in this example, if the AUD or the Australian dollar is pointing up and the CAD is pointing down, then whatever currency pair you see in the first position in this scenario, AUD, it will go up. All right. If you see the CAD going up and the AUD going down, then it will cause the chart to go down. So that's just, I don't want to confuse you, but when you see price where basically it was, let's look at it again. It's the 4 hour. When it's doing this right here, if we kind of take a deep, a close look at it, it looks like it may have been wrapped. It crossed, but it could be a continuation where it's not really getting that pop. Like we're looking for the signal line, which is the last 12 in this example. You got it set on 12 periods. And then the difference again between the last 20 and 50 periods, okay? When they cross, we're looking for that separation to get what we're looking for. All right. And normally when you get faked out in this strategy, it's going to be when it wraps around and it doesn't really separate, right? See how it's separated there? It's separated there, okay? I mean, at least 30 pips. But when it goes up and down, but the good thing is when it goes up and down, right? Or when it wraps up, fakes like it's crossing and cross back over, it's usually just in a range where you're not losing too much. So it's a problem that you won't mind having, if that makes sense, right? It's a problem you won't mind having. So just looking at AUD CAD again, we're looking for it to remain bearish, and we also see these two lows. We connected those, so it's possible that it could go down a lot more than that, but we're just looking to get in and out, like we were saying. All right. Then the AUD JPY, we still have this cross. Cross happened at about between 3 and 5 o'clock. So let's go here between 3 and 5. So this is where we got the cross. All right. And it delivered, once you look at that, 137 pips. Y'all, I cannot make this up. This is just the average. This is just the average. All right. It delivered this week, y'all. AUD JPY. It gave us, say, average of 128. Is 128 in that 136? Absolutely. So in this example here, basically, we're waiting on either the next cross, which is multiple ways you could do this. I mean, you could go down to the 15 too. You see that there's still some bearish. That's why I'm not getting in that right now. Right, 15, the hour. Okay, so in the hour we're getting across or they're touching. All right, but we're using the 2 hour as our guideline. All right, the lower time frames, the lower the time frame, the more opportunities, but the more you can get faked out. So again, I like to take my directional bias, bullish or bearish, from the 2 to 4 or maybe even the daily. All right, the daily. So with that being said, it appears that AUD/JPY may actually just be in a range. And again, this is a holiday week. In fact, they saying that the market is going to be closed on Thanksgiving, and it's going to be a half a day on Friday. So basically, the next 24 hours is the last real 24 hours of trading this week. All right. So you know, a range makes sense. A range makes sense for a week like this. So again, notice I took a lot of lines off my chart. All right. I took a lot of things off my chart because you don't want to have too many conflicting opinions. All right. You want to look at things very simple. All right. Very simple, and go get your profit and don't get greedy. All right. For an example, I took a loss. Let me see if I can remember what that loss was. It was AUD CAD. Okay. So earlier, here, it appeared that we were going to. Oh, let me go to the 2 hour. And I normally would have caught this too, which is crazy. So we got this cross that happened here, and price shot up, right? And when price shot up, I bought like a dummy, right? I bought like a dummy. Where I knew that even though price could still be going up, which is possible, even though we do have cross look like it's about to form, right? Like we just stated. Um, you know, remember you still have pullbacks in the equation. So that was the shot, that was the pullback. All right. That was definitely something that could have got had for sure. All right. But again, with this pair, we're looking at bearish as well. So I guess that's pretty much it. That's pretty much it. So we talked about scalping it, scalping these swings, basically, getting in and out of the market. We talked about setting alerts. You can also set orders. So if you want to be even more deadly accurate, instead of you just jumping in like I did, and then now you're kind of getting you're waiting. All right, you can set that order to say, you know what, whenever price breaks, remember we're going to use our rectangle, and we're going to map out these areas of consolidation, because these are the areas, again, that price wants to go to. All right, those are the areas that price wants to go to, and these are the areas that we're going to be getting in and out of the market when we're scalping these swings. All right, in and out, in and out, in and out. I mean, 100 pips can add up really, really quickly. You know, in fact, I'm up today about 80 something pips today. Even with this 40 pip loss, really what it was a 40 pip loss. But my point is, it's going to be pullback. So Still use your judgment, when it comes to, your entries. And if you want to be more daily accurate, you could say, all right, I want to enter the market when price breaks this floor. So what you would do is you would go to order. All right. You would figure out a price that's underneath that floor, which is in this 0.95550. And then you would put in the entry at that level, that we just said, boom. And then when price breaks that level, you'll automatically be entered into the trade. Then you can set your level for your take profit. You could put your level for your stop loss, right? All right there. So then that way, if you're wrong and price doesn't break that level, all right, if it doesn't break this level, then what happens, and it goes up, then you saved yourself a loss, right? Because your order was never triggered. Your order was never triggered. So sometimes that's the best thing to do, especially if, you may be getting in a trade, or you may hold a trade overnight or whatnot, right? In and out, very precise. If it doesn't happen, cool. That way you can sleep at night. So I hope that helped y'all for tonight. So what we'll do is we'll all go in again on Thursday, and that'll be 2 days. All right. It looks like we have some opportunities, some alerts that's probably going to go down with this strategy within probably tonight. So again, just set your alert. Even if it is based on what we said, it may go off at 3 o'clock, but guess what? That's the best time. It only take 2 seconds. I promise you. Open your eyes, put that trade in. Woo! It's almost like an alarm, but it's an alarm letting you know, hey, come get this bag. Right? Get in the trade, go back to sleep. Wake up at the start of the next period, 7, 8 o'clock. You may be up 50 pips, Or you could say, I don't want to trade London at all. I don't want to be in any overnights. I'm good with what you said, getting in at noon, getting out at midnight, right? Or whatever time you go to sleep. I don't know. But anyway, I hope that helped. And again, we'll see where we at. We'll see where we at on Thursday night. Oh, I'm sorry. Thursday is Thanksgiving. We definitely will not be on Thursday night. So I'll do Friday. We'll jump on Friday. Or we could do tomorrow. I don't know. Just pay attention in the group. It could definitely be tomorrow. Actually, tomorrow may not be a good day either because y'all gonna be cooking. So most likely it's probably gonna be Friday. And if it's not gonna be Friday, then obviously we'll talk again on Sunday. Weekly market forecast. If you have any questions, concerns, if you got any markups, don't hesitate to send them to me. You can ask my opinion. Y'all act like y'all be bugging. You're not bugging me. I'm gonna jump on here and I'm gonna do these trainings, whether or not anybody gets on, if they don't get on, whether you got a question, whether you're not. Look, I've been trading now for the last almost 6 years. I'm not going to, you're not bugging me. All right. If anything, you're helping me stay on my game. You know how many nights it's been where one person got on the training and it ended up being 100 pip training. Crazy. So definitely grateful for that. But anyway, I'm still talking and rapping. But this call is officially over. Y'all have a good one.